Welcome back. And guess who's on the New York Stock Exchange floor? Marc LoPresti. Welcome, Mark. Mark is
Thank you.
going to be, by the way, folks, on with TD Ameritrade and Nicole Pelladidis. Is that how I pronounce her name, Mark?
Well, unfortunately, John, I'm actually going to be on with Oliver Rennick, and that's at 3 p.m. Eastern time, right here from the floor of the New York Stock Exchange.
Ah, very nice. Very nice. Well, the floor always looks great. It's a great backdrop, and it's great to have you, Mark, back on the Rebel's Edge. So let's dive into Macro Minute because we got ADP that showed that fewer workers were finding work in March than expected. And this followed on the heels of some other somewhat disappointing news, about job openings falling below 10 million at the end of February for the first time in 2 years. What do you think, Mark?
Yeah, that's exactly right, John. Company payrolls rose by just 145,000 for the month, down from an upwardly revised 261,000 in February, and the street estimate of about 210,000. This is a classic case of is bad news good news, and it is the kind of bad news that actually be providing some buoyancy for markets as it gives Chairman Powell and the Fed an indication that labor markets may be cooling finally to the extent that he needs to do one more 25 basis point hike and then hit the brakes on this rate increase in the attempt to tamp down inflation. But market's not buying it so far today.
No, and the NASDAQ, to Mark's point, folks, really reflecting that. NASDAQ falling by some 190 points or something like that, about 1.5%. Ouch. All right, let's talk just a little bit, Mark, about lumber, because we both knew, I think you and I were at the Wall Street conference 2 years ago when lumber was hitting record highs. It has come off those record highs with a vengeance. And now I guess there's practically a glut, but it's down some 65% over the last 2 years, Mark. What do you think of lumber here?
Yeah, that's absolutely right, John. And lumber's really interesting, and this, of course, being our fantastic futures segment where we're covering the lumber markets. It's a highly illiquid futures market, but it's used as a leading barometer for a lot of other commodities, and it often signals the path of least resistance for other commodity futures. So it's definitely interesting that it's coming off those 2 years, 65% down that you just mentioned, up 150 basis points today. We will see, but we think that lumber's recent strength in the face of all of the bank failures and tight credit markets can be a bullish omen for copper, crude, other commodity prices, things like gold that we've been pretty bullish on over the past couple of weeks.
Yeah, to Mark's point, folks, we pushed all the way up against the all-time highs for gold. Yeah. And now it's kind of sideways right here, taking a breather. We'll see how much higher gold goes as well on fantastic futures, maybe tomorrow. Mark, let's talk about Western Alliance Bancorp. This was a $70+ stock at the beginning of March. Obviously, with all the banks that were taking hits from the runs on them, in particular, these smaller regional banks, this one was one that suffered. Ken Griffith jumped in and bought a bunch, supposedly below 10. Yeah. It drove the stock as soon as Ken announced that he was taking better than a 5% stake. It drove the stock into the 30s, but today is the worst drop it's seen since that mid-March decline. And I guess it's because depositors had fleeced?
Fled
more than anticipated.
They got the flock out of there, John. That's what we know.
Got the flock out.
Make like a shepherd. Yeah, well, listen, I mean, loyal viewers will recall that we covered the Citadel big position in WAC about 2.5-3 weeks ago now. But just when you thought that the bank failure saga was over, we're seeing continued indication that we may not be completely out of the woods. This story, of course, consistent with the comments from JP Morgan's Jamie Dimon about how this could have 2 to 3 year lasting effects in terms of the relative strength of these banks, especially when it comes to the regionals. And look, John, it comes as no surprise that there are concerns on Western Alliance's the deposit balances because depositors have taken $1 trillion with a T dollars out of regional and mid-sized banks and into those big money centers, right? Half of that number are $500 billion since the fall of SVB. And we don't see those money flows letting up. It's not good news for the regional banks.
Yeah. And it's also not good news for them, Mark, that we're all going to scrutinize their unrealized losses, these so-called investments that they've held for long periods of time. If they intend to hold it all the way to expiration of that bond, then they don't have to recognize the loss because they haven't sold anything.
Right.
But we'll keep an eye on that. All right. What about Albemarle, ALB? Lithium prices have taken a hit, surprisingly so, I think, Mark, because it's not like we found a real easy way to get it. And you need it for Ford, General Motors, Volkswagen, Volvo, all of these car companies that are competing with Tesla for EVs need lithium, cobalt, nickel, manganese, and all that sort of stuff. So it's kind of strange, but this one apparently gets a downgrade today and just gets clocked.
Yeah, it did. I mean, listen, lithium prices are down 50% or a little more than 50% since the beginning of 2023. And that has a lot to do with the battery supply chain, John, and not necessarily the long-term outlook for lithium demand. As you point out, as the EV market continues to grow, not just with the Rivians and the Lucid Motors of the world, but as the big automakers, the OEMs, as we call them in the industry, continue to enhance their footprint in the electric vehicle marketplace. So I actually think lithium prices are going to start to stabilize as we get into the end of the second quarter of 2023 and could actually provide a good foundation for a rally going into Q3 and Q4. So we're going to be watching those lithium prices very carefully and names like ALB.
Yeah, certainly that one is the one that people really focus on. And
Yeah,
I think it's more of a deal down here at 190s. Certainly after that big decline from 290 a month ago.
Yep.
All right. What about this one, Mark? You and I work with a little company called Quentas that is a payments company. This one, DLO, is a payments company that is based in Uruguay. And they basically reported results that show growth, but not as fast as the street was looking for. And with these kinds of companies, they're looking for fast growth from, the consumers in these various jurisdictions. This one didn't put up those numbers, so they were whack, whack, whack hitting the stock today.
Yeah, I mean, to me, John, this is as much a story as one of those high growth, early stage tech companies that needs to continue to wow investors and wow the markets with quarter over quarter growth and showing that a consistent customer acquisition to the upside to justify lofty PE valuations and stock price. I think for the industry in general, in terms of companies that are looking to provide alternative payment rails for remittances back and forth to these emerging economies from folks in the United States, companies like DLO. The issue with unbanked and underbanked globally is massive. There is a need for what companies like DLO does. And so we are long-term bullish on the industry, but we expect to continue to see investors punishing small companies like this one that don't continue to deliver that quarter over quarter impressive growth.
Yeah, I'll tell you one thing that was really impressive, though, Mark. They had revenue retention of 165%.
Yeah.
In other words, customers really like what they do, and it's down 66% from its recent high. So maybe in this $11, $12 range, it's worth a shot.
Yeah, I mean, investors should look at this. I mean, the numbers were strong, right? I mean, payment volume for the full year was up 75% to $10.6 billion. That's the amount of money flowing on those payment rails that these guys provide. Those are good, strong numbers, just not enough to keep the street happy.
Yep. Well, let's talk about one that was keeping the street happy today, FedEx, because FedEx increased their dividend. It's still kind of minuscule, but the forward dividend now is about 2%. That's the forward dividend yield annually anyway. It's trading about 3.5 million shares, so it's definitely definitely under accumulation versus 2 million on a normal day. And they affirmed their cuts for some of their capital spending, Mark, which were impressive, the amount of money they think they can take out of their spend.
Yeah, there's no doubt, John. And the stock trading about 123 basis points up as we're live right now, off the day's highs when they were up around 2%, if not a little bit higher. This is a story of what is sort of going on across large caps, which is to say companies that are reducing burn, that are consolidating costs. It's consistent with the story we're seeing around some of the labor reduction and the layoffs that we've seen both in tech and outside of tech, but getting costs under control, improving margin, dropping more dollars to the bottom line, improving EBITDA. That's the kind of corporate activity that the street and investors are actually excited about. That's why, in my opinion, we're seeing positive movement to the upside in FedEx.
Yep, I agree. And I this is one that, when it had a big oopsie last year, Mark, I bought it on that big oopsie.
Oh, yeah.
It traded down hard. It is now up about $75 from that.
Yep.
And I wish I hadn't sold it, quite frankly.
Yeah.
All right. Pete was nice enough to give us some of his sport clips today, Mark. And he thought some of the more interesting topics were NBA MVP, the most valuable player. And, for a whole variety of reasons, Pete wanted to focus on players that put in as much time as possible rather than that so-called, load management, I think they call it, when the player doesn't play because, they need a rest, to try to make a playoff run and things like that. That really does hurt the fans. But Pete's picks here, Mark, were Joel Embiid over at Philly, Giannis over in Milwaukee. He thought those were two of the top picks. And Giannis, of course, is just a phenom. It's one of the reasons I think Mark Lazary was such a lucky guy with this acquisition of the Bucks a few years ago. When they got Giannis, boy, that became one of the hottest tickets in the NBA.
Yeah, no doubt, John.
So I would say those guys, my money would be on Giannis. There's a lot of great players, of course. It's one of the most interesting talents in sports are big men running up and down the court, able to shoot 3-point shots, as well as defend other, 300-pound men that are banging around in the paint, as they say. I'm impressed with all these guys, but rather than just focusing in on, LeBron James and so forth, I think Pete's right to focus in on these guys. What about top NFL free agents, Mark? We've got one guy that played, you and I went to see a Jets game a couple years back with Scaramucci up in his box. But this guy was playing for the Giants, and that was Odell Beckham back in the day. He then, made a couple stops, one of them, I think, over in Cleveland, the next one with the Rams, and then he blew out his knee. Is that the reason you think that people aren't picking this guy up? Because he's still available as a free agent.
You got to take into consideration that his injury status and that bad knee might be making him a somewhat less attractive prospect. But I don't think you count him out of the running, John.
No, I don't think you can count Odell out either, but it'll be vital. And I'm sure the teams are looking at not giving him a big upfront bonus, but rather they'll give him a big contract, I believe, but it won't be one of those, in my opinion, 30 million up front, because you don't know what the upfront's going to be. He's sat out an entire year. And then you've got Jadeveon Clowney. This is a guy, I know the name's a little funny, but anybody that watched this guy play at South Carolina knows that this guy is a beast. But for whatever reason, maybe his agent's selling it too hard, Mark, because nobody has basically taken the bait yet and said, yeah, Jadeveon Clowney, I think I should pick him up. He's an edge rusher, and he is a physical beast. So you would think that there are teams out there that need an edge rusher, you know, that speed rush guy. And this guy's big enough to also disrupt a lot in the middle. But again, I think some of these could be contracts, Mark. You and I know Kristen Kaliga, who's one of our friends that basically is an NFL agent. Do you think some of these asks are just too big, and that's why both Jadeveon and Odell are available?
Yeah, I mean, listen, John, if you watch the trajectory of these contracts, at some point in time, you got to say they have to come back down to reality, right? Or at least match within what the overall budget of these teams are. So I think that's probably a fair guess. They might just be asking for too much.
Well, we appreciate you joining us, folks. We've got one more thing to tell you about, and that is a company that we're working with that is pretty spectacular, and it's known as Accelerate Tax. So Mark and I have worked with Gino and his team for a while. This is one of those deals where I'll let Mark explain, but basically, if you have 500 or less employees, you may very well qualify for a credit of up to $26,000, right, Mark?
Yeah, that's right, John. This is a program from the government that was created under the CARES Act in response to the economic devastation caused by the COVID pandemic. And this is not a loan. This is not PPP. This is a check, free and clear, for qualifying companies, and not all companies will qualify. That's important to point out. But companies can apply if they were impacted by COVID, if they had business closures, supply chain problems, demonstrable impact, and W-2 employees that were not family members, by the way, they can apply for up to $26,000 per employee. This is a highly underutilized program. By most statistics indicate that less than 10%, I think, is the last statistic I saw, of the capital available for this program was actually applied for. And these guys at Accelerate do a very good job of helping qualifying businesses access this important program. So go check out our friends at Accelerate Tax. You'll see it at the bottom, www.accelerate.tax.com.
Yeah, and like you said, Mark, not everybody qualifies, but
That's right.
An awful lot of companies that have fewer than 500 employees do qualify for this. There are several levels of qualification, and up to $26,000. So if you had 10 employees, that could be a nice check coming back to you. And these guys don't charge a thing unless you collect. So
That's right.
That's one of these things with the ERC. These employee retention credits, you get the money if you're that employer, and then maybe that helps you build out that company even bigger and stronger going forward. So
yeah,
check
and particularly
out Tax.
in this credit contraction situation, right, following Silicon Valley Bank, where small businesses are going to have access to less and less money from the traditional banks, unfortunately, this could be a very important program to help small SMB, as we call them, small, medium-sized businesses, access capital if they qualify that they need. There's important disclosures on Accelerate Tax's website. Please read them, but go check them out.
Thank you very much, Mark. Well, great Rebels Edge today. We always appreciate Marc LoPresti as well as Jared, who is handling the boards. We will be back tomorrow at 1 p.m. Eastern Time for the final Rebels Edge of the week. We'll see you tomorrow at 1, everybody.